Welcome to Trading Lounge and the SP 500 for the 6th of March. So we had seen this first move down through here, and that can be counted as 3 waves or it can be counted as 5 waves. So we're just going to leave that open for the time being. So we're focused on this particular rally here. In this case here, we know that the cash market showed this little bit rough here from the futures market, but on the cash market we could see that it had a nice 5 waves to the upside, and we look for a retracement back for 50-60%. Obviously when you're working with large numbers, that can skew the wave structure somewhat, but we can also see this move up through here, which hasn't made a new high here, hasn't made a new high on the cash market, hasn't made a new high for the Nasdaq as well. So we're going to view this in 2 ways. First of all, we can look at it as an A and a B and a C wave here, and if that's completed here, then we'll see a move further down coming in this way here. So plenty of time for everything. On the short side of things, we would want to see the 3000 as the retested resistance, so that would come down, have a bit of a bounce, come through, retest it here, and then you would have your trigger on that particular low here. That means that once that retests that and fails and makes a new low, it's rejected that particular number, and the bears have taken over the market depth in that case. So but also from that low to that high here, the 61.8% is also down here a little bit lower, so we'll look at that as well. So from here we can look at just go to the hourly chart, I think. So we're looking at it as an A wave here, a B wave here, and we can count 5 waves up for a C wave here if we take in this low here, that high as 1 and 2 here. So but it hasn't made a new high here, and normally we would see some sort of equality between wave A and wave C, and we're not seeing that here, right? But just while we've got it here, we'll look at that as the top, and we'll look at another count in a moment. I'll just go to the tick chart here. So in this case here, we can look at wave A here, wave B here, and 1 and 2 and 3 and 4 and 5 here for wave 5 of C, of B, or 2. And then we can look at this as wave 1 and 2 and 1 and 2, and moving down lower through here. There will be a support here, of course. The other point that I want to make here too in terms of shorting here is this is group 2 here, 65, 72 and 80. So for a safer short trade, we would want to see this level here as the resistance. So this number here, the 2972, as a retested resistance, would make a safer trade to the downside at that point. Okay. The other point here with all of this, so that's where we're going to short. So the short trade is 2972 as the resistance. Okay. The other count that needs to be taken into consideration is this one here. So in this case here, we count up as wave A here, then an A wave down here, and then a B wave as an A and a B, and a C wave for the B wave here, and then down for the C wave here. So the 61.8% is still a bit lower through here as well, so that can bring us down to 6.2 here, and we're going to go short at 7.2 as resistance, so as close as I can get to being clear at that point. Because if we were going to short this market, I mean currently with this market, the 3000 is the support, isn't it? So if you're going to short, you want the closest largest number as the resistance, not the support. So this market is supported at this particular point in time. So yeah, look, anyway, this is the other count, and it's also viable because the other thing too here is we only ended up going to the 50% retracement level, not the 61.8% retracement level. And secondly, wave C here doesn't have any equality with wave A here. So there's still a problem with all of this. I know that the market is obviously really bearish, and maybe some things in they move emotionally, and there's a lot of pressure out there at the moment on this market. But I think a little bit of patience here, and a bit of consideration, and just staying safe is the call here. So really, if I was going to short at this particular time, I would want to know that 3,000 has been rejected. And that's not the case at this stage. So anyway, just pointing this out just to be a little bit sort of mindful. We had a trade going into from this high here, going up to 3,100, and then we're waiting for a classic trading levels pattern to sit on here. So the reaction, the first high above the level, and then we could have gone long above this high here, but that never eventuated. Then you can bring it down to these highs here, and none of those got triggered. So you shouldn't have been triggered on a move to the upside here. Obviously, counting this down here, you could count this down as 1 and 2 here, and then 3 here. This wave 4 here is pulled back up too high, if that's going to be the case here. So it's probably easier to look at this as wave 1 and 2 here, 3 to here, 4 to here, and 5 to here. And this pulling back up 50% here of that previous trend. So if this market, you can always expect to bounce off the large number here. So it doesn't make that wave C correct, okay? That's one thing. The first thing here is that the natural thing is that this is 3,000. It's the end of the session. There'll be short covering, and this is the support. This is the psychological aspect of it. The 50-60% retracement level from this high to this low here will be at group 2 here, 65, 72, and 80 here. So it's also valid for the market to move up here in 3 waves here, test supply, and then drop from that point there. So that's also what you need to be looking out for, and short it on the failed retest of this here as well. So yeah, I mean, the normal A, B, C here should be 1, 2, 3, 4, 5 for the A wave, a nice 3 for the B wave, and then a nice 5 waves for the for this structure here. It should be a simple zigzag correction, but because it hasn't made a new high here, it does raise question marks about it all. So yeah, if this had moved higher here to the 61.8% in 5 waves here, then we wouldn't have a problem. But there's a couple of flags that are raised within all of this, so caution is required. All right, I'm just going to leave it at that. The Nasdaq's basically the same, and stocks are the same as well. So we'll just yeah, you got to work your way through this one. Alrighty, cheers.